I think it's safe to say that AMC Short Squeeze is on and alive, and some will say that it just started today, and I am one of those people. I do believe this is going to be an extended event. You will know why by the end of this video. We're going to be going over the technical analysis as well as the short volume ratio for the day and the trade that I made today, which is absolutely phenomenal, and you guys will learn a ton from this video at the very least. Now, do me a favor. Some of you guys already know what is coming, but tap, tickle, touch, or smash the like button for me, whatever you want to call it, but make it turn blue, as well as subscribe to the channel. Now, I also have a link down below in the description for my buy and sell alert, so you can be up on these trades as soon as I make them. Now, with this specific trade we're going to be talking about, it went up over 500% today, and this would cover your buy and sell alerts for nearly 2 years if you made this exact same trade and you know, took profits with me at the same exact time. Now, before you call me a paper hander, this was options, and I'm still 100% in this trade. So if you are very confused, if that just confused you, you're definitely going to want to stay through this video to get a great understanding of what I am talking about, because it is fairly simple and not a lot of people know this strategy. So with that being said, let's talk AMC. Now let's briefly talk about what AMC stock did today before we get into my trade that I made today. Now, we were down about 5%, even hitting a low down 5.68% when trading started today, and this was my golden opportunity to make a trade because I knew this Gamma Squeeze and Short Squeeze was going to continue throughout the day, and I even hinted at this in the last AMC video. But pretty much ever since we had down 5% and when I made the trade, we were starting to come up, and then ever since then we went absolutely crazy. Just about half an hour later, we were up 17.5%, breaking over that critical $20 mark at about 9:55 a.m. when I did put this trade on. And then we did hit a high at 2 p.m. of $29.43, up 50.46%. We did sell off a little bit, still up 30.67%, and then ripped up to another high of up 46.88% at $28.73. And now we're currently at $26.45. Now, the trade that I made today, I bought an AMC $35 call back here when it was $80 for 0.80, so that is $80. I bought this specifically at 9:51 a.m. If we pull it back to here, it was, you know, around the $80 mark. This contract was down 75% from yesterday when we were up about 25% for the day. So absolutely incredible. This contract shot up to a high of up $635 and did start to come down quite rapidly after that. Within 5 minutes had dropped about $200. So I did. Check out what I did. I sold a $36 call, so I did not sell the same option, so I am still in this trade, and I will explain this in just a second. But I sold the $36 call. I collected $455, so essentially I made $375 profit with zero risk left on the trade. Now, this does still have an open balance of $10, and that is the spread or the difference between the two, because I had the right to buy 100 shares of AMC at $35, and then I agreed to sell 100 shares of AMC at $36, so you collect that money up front. And essentially, if AMC never reaches $35 by this June 4th expiration, you would lose this $10, but you still keep the $375 profit or the $455 you received back. So worst case scenario, I walk away with $375 profit, about a 400% return, something along those lines. I'll actually go look. Still up 316%, was up a lot higher. And when I did sell out of and get the $455 back, sold out of this $36 call, it was much higher. So it was about 500% when I sold out of that. But like I said, worst case scenario, I walk away with $375 profit from an $80 investment. Best case scenario, and this is where it kind of limits you, if AMC goes higher than, you know, $36, my max gain is the difference between the two, and that is $1. So in options world, that means $100 is my max additional profit. Now, playing options is much different than diamond handing, because with options, they expire worthless. So if you are up big on a trade like I was, you want to get your initial investment back, but stay in the trade. And that is what I did, and that is what anybody that is playing options would do. Now, if you were holding the shares, I am not holding shares, but if I was, I would just hold them and let them ride. I would sell cover calls maybe, but I wouldn't be paper handing this. That is not the point here. AMC does have room to fly, but if it doesn't, for whatever reason, you don't want to turn a massively winning trade into a massively losing trade. So if you have options and you are up big, a life-changing amount, whatever the case is, you might want to use this strategy and take some profits. Before we move on to the technical analysis and the short volume ratio, I do want to give this to those of you guys that have options and are up massively and can do the same strategy as me and have a clear reference as to how to do this. Now, put yourself in my positions. Forget this $36 call is -1, because that's the one I sold. So I had the $35 strike, like I said, June 4th, and it is key. You have to be on the same expiration date. If I tried to do this on the May 28th expiration, it would not work. It would say you need 100 shares worth of AMC. That is not the case. So make sure you are on the same expiration day of the contract you are up big on as the one that you are trying to sell or get your profits back on. So I had the $35 strike. I had bought that for $80. It went absolutely insane. Now just imagine the 36 was at $455. So if you're on Robinhood, it looks just like this. You go from buy to sell, stay on the call, and you click on this and you can short this call, and it comes up short a call right here, and just do one. If you want to get filled instantly, go to the lower price or the bid price. You'll get filled instantly. If not, try to get filled in the middle, and that is at $3.20. Well, $323 right now. It comes up $3.23, and that is essentially how you do that. And like I said, your max gain on this would be $100, but you don't have to do the exact strike that is above it. You could go out, or in my case, I could have went out to the $39 strike, collected less premium, but had an additional gain of $400 if AMC closed over $39 by your expiration date. Now, like I said previously, if AMC doesn't close over $36, you will lose the difference between this, but you can cash out of this at the same time. And that is essentially doing the opposite. So if you are -1 here, +1 here, it is the opposite. You go buy this one and then you sell the one you're positive on. Comes out to the total credit of $10 in my case. Click whatever one and try to get filled, and that is how you completely exit out of this whole strategy. Now, moving on to the short volume ratio, this is the number of shares that were shorted today, and this is where it gets super important. So it comes out to 30%, and take a look at this volume. I don't think I've ever seen anything, you know, as high priced as AMC on the public markets be at 700 million in volume. This is quite incredible, or almost 700 million at 697 million for volume for the day. And out of that, 212 million shares were sold short. Comes out to 30%, like I said. And now let's see how that weighs against the last 10 days or so. And we're pretty much at the same as we were yesterday. Ain't that weird? We had about a 25% pop yesterday, a 35% pop today, as high as 50% in the short volume ratio. It actually increased by about 0.3 of a percentage point. So it is pretty incredible. I do think this is likely to continue, just because the fact of shorts are not letting off the gas. They are continuously shorting AMC. So if we can keep the buying power going into AMC options and shares, this definitely has massive room to fly. Now let's take a look at the technical analysis. And I have not edited none of this or whatever. I will pull it up right here for you guys, and we're gonna go right to AMC. I do have ETC up, so I'm gonna pull up AMC, and like you guys see, I don't edit any of these charts. They're the exact same, and essentially it looks very, very bullish. Like you could see, this is obviously a squeeze. Just taking a look at the MACD, the gap between the signal line and the CCC line is quite incredible. A huge gap, and really what that means is it is very bullish. If the CCC line starts to go under the blue signal line, that will signal a bearish downtrend coming. And obviously if the CCC line stays above the blue line, that will mean we're still in bullish territory. Now, as far as the technicals are concerned, where we currently are, we blew past our previous high of our short squeeze at $20, and GameStop is actually inversing AMC for the most part. When GameStop was hitting its highs today, AMC was hitting its highs today, GameStop was actually negative for the day. I'm not quite sure how GameStop actually finished, but they were inverting very, very hard. So a lot of capital is flowing to AMC right now, and that is another key factor leading to this, thesis of the short squeeze is going to last a long time. But take a look. Back since 2013, when AMC did go public on the markets, we are getting almost to this range that we have not seen since 2015 and 2016. So I'm going to go ahead and mark this on the chart, and that is $33.51. And if we can go to our all-time highs, we have room to fly here. But our next stop is gonna be this $33 level. If we can break this, then we're probably going to $50. If we break that, we're going to $100. Now, I don't want to acknowledge the potential upside here. We have to acknowledge the potential downside, and for right now, it does look about the $20 level will be a key support. Even if we fall down to $20 tomorrow, I do not think this trade is over. This happened during the last short squeeze events. We go up a lot, we come down quite a bit, and then we shoot past that high. So I do expect something along those lines, maybe a consolidation period tomorrow, but we do have a lot of shorts shorting the stock. So if we don't see enough buyers show up to the market, those shorts are selling the shares at the open market. So there's a stream of shares being sold at the open market. If we don't have enough buyers coming in to buy those shares and cause more shorts that had previously hedged to start covering those positions, then we will come down a little bit. But I don't see us falling under the $20 level anytime soon. To be quite honest, it does look very bullish. Now, as far as the 50-day moving average and the 200-day moving average, 50-day moving average is at $15.67. So this does look like our bottom as of right now. If we were to crater to this, traders would probably see this as a trading opportunity. Now, really, if we go lower than the 200-day moving average, that signals a very, very bearish downtrend, and that is at $11.90. And quite frankly, I don't see that happening for a very, very long time unless some bad news does come out with AMC. I do apologize for skipping around a little bit, but we're going to go back to the chain and to look at a little bit of option activity, because there's definitely a gamma squeeze going on here, and we are on the contract that expires tomorrow, or the expiration date of the contracts that expire tomorrow. We can see 81,000 in volume, 44,000, and then this one 176,953 options, and these are $112 strikes. So people are betting that AMC does go way higher, and the same thing is basically true throughout the chain. Just liquidity does fall a little bit, but when I say a little bit, there's still around 15,000, and then you get this one that is 35,000. So people are betting that we go much higher, and this is a huge driving factor driving AMC stock up more, because the closer to the money options that are bought, the market makers, if there's not enough people to sell those options and agree per one option is 100 shares to agree to sell 100 shares at that price, the market maker comes in, buys the shares to hedge the position, because somebody has to be on the back end of these positions, and then that drives the stock price up even higher, causing the shorts to get squeezed even more on their positions. So a gamma squeeze and short squeeze really do work one and one. They are pretty much the same thing, but it's different. They kind of work together to make an exponential short squeeze go on. So that is pretty much all for this video. I hope you guys got something useful out of it. If you did, hit that like button for me, as well as comment down below if you're diamond handing AMD, if you're playing options or shares. Really make sure to let me know if you're playing options or shares. I am very curious how you guys are playing this. Now, let me know if you guys like the ghetto spread strategy, if you think that's a good strategy. Hopefully you do, because options 9 times out of 10 expire worthless, and you want to keep a winning trade instead of potentially losing a winning trade. So with all of that being said, I'm going to get out of here. My buy and sell alerts are down below in the description if that is something that fits your kind of needs. And until next time, you guys be careful, stay safe. AMC is going to get a little crazy here, a lot of upside, but potential downside as well. Until next time, take care.